In this video, I'm going to talk about ordinary share capital, right? I'm going to talk about ordinary share capital note to the balance sheet, and I'm going to make use of the Eastern Cape, June 2021. Okay, now, so I already have a pre-populated answer book here where there's ordinary share, authorized share capital at the beginning, that is your 1.4 million ordinary shares. But remember, authorized share capital refers to the total number of shares that you are allowed to sell according to your memorandum of incorporation. So you are given that at the beginning there were 650,000 shares in issue on the 1st of March 2019, and there was an additional 250,000 shares issued during the year to give you a value of 1.3, but we're not given the value of the shares at the beginning of the year. And then you're also given a blank space here, which is most likely going to be your repurchase of shares. And in order to do this, if you look at your information here, you are given 4.5 as your share capital, your ordinary share capital of 4.5 million. But we need to know whether this ordinary share capital was at the beginning of the year or was at the end of the year. And in order to get that information, we need to look at information B. So on B, it says the company is authorized to sell 1.4 million ordinary shares, and 650,000 shares were in issue on 1 March. These are the shares whose value we are not given, right, which we want to establish. But in order for you to be able to establish that, I think the next bullet, which is bullet number 3, gives you that information. Now, 250 new shares were issued on the 1st of September 2019. The amount of 1.3 million was received and has been properly recorded. That is very critical, that it has been received and it has also been properly recorded. Now, that means your 4.5 million that you have on your extract from the books includes the 1.3 million for the additional shares that were issued. And then it helps to resolve this issue here, to say, in order for us to know the value of the shares at the beginning, we will have to say 4.5 million minus the 1.3 million. Why are we subtracting them? We are told that the 1.3 that was bought during the year was recorded, meaning to say the 4.5 that we're seeing on our extract of the book from the books includes the 1.3. So we are taking it out in order for us to know how much was it at the beginning. So if I put my calculator there and I say 4.5 million minus 1.3, it will give me 3.2. So which means the value of my shares at the beginning is 3.2. Okay, that is resolved. And then we go on to the next part of that information, which is the last bullet. 100,000 shares were repurchased on the 5th of February from an unsatisfied shareholder for 30 cents above the average share price. This transaction was not recorded. So in other words, the 4.5 million has not been affected by the repurchase or the buyback of shares, because you told here that it wasn't recorded. So we need to record that. So what are we going to do? On our number of shares here, we're obviously going to put our 100,000. Remember, because it's a repurchase or a buyback, that figure is supposed to be in brackets. So we say repurchased at average price. So we want to know what the average price of those shares was. Now, so remember now, when you want to calculate average price, okay, when you want to calculate average price, we say value of issued shares, over number of issued shares. Okay, now, so your value of issued shares, we can find that information on here. So our value of issued shares is the 3.2 and the 1.3, and the number of issued shares is the 650 and the 250. So you're going to say your value of issued shares, it's 3.2 plus 1.3 over number of issued shares, it's 650 plus your 250. Now, if you make your calculation on this, you're going to see that the average price is actually 5 rands, right? If you say 3.2, which is your 4.5 million, you can say that's your 4.5 million divided by 900,000, it will give you 5. So you can actually see that the average price is actually going to be 5. So which means on our note number 7, the average price is 5, and then you must take your calculator and then you say 5 times 100,000, 5 times 100,000, that gives you 500,000. So the 500,000 will then come this side as the value, but remember, because it's a buyback, it's a repurchase, it's supposed to be in brackets. So everything that you need on that note is completed. So the only thing that is left is for you to make your calculations, which is going to be 650 at the beginning of the year plus 250 minus 100,000 that we bought back, and that gives you 800,000. It means at the end of the year, our shares are 800,000. Now we also need to know their value. So the value is going to be, you're going to say 3.2 plus 1.3 minus the 500,000, which is your repurchase, and that will give you 120, like that. That's how you're going to get that. So it is 3.2, to just verify that, plus 1.3, and this will give you the 4. This will give you the 4. I think it's 3.2 plus 1.3, and that gives you the 4.5 minus the 500. It will give you 4 million actually. So this is supposed to be 4 million. So I made a mistake there. It's supposed to be 4 million. So in other words, the value of your shares is actually 4 million, which is 3.2 plus 1.3 minus 500,000 to give you 4 million, right? This is the value of shares. Thank you.